Poly market, how many Fed rate cuts in 2026? Right now, you can kind of see, well, we've got 3, there's a 4 in there, but if you look at the chart, you'll start to see that once you get above 4, add those all together. You start to accumulate all this, and what we're looking at is a probability of maybe plus 40% of getting 4 or more rate cuts in 2026. The reason this plays into liquidity is everybody is parked in money markets, stable coins earning yield, all of these things. Those will immediately get impacted, and we'll see a drawdown of that liquidity, and it's going to be looking for a home.
Japan has been a big buyer of treasuries. Obviously, we know China is also a big buyer of treasuries. Maybe they need to raise cash in order to support liquidity. They might have to unload treasuries in order to do so. I think the Fed probably steps in first and doesn't necessarily say that it's because of this, but there's already a couple of firms out there talking about the Fed needing to expand its balance sheet again come later this month or even in January because of the liquidity that's dried up in some of the overnight lending markets.
Of course, many people would look at this and say, well, listen, if Japan unwinds their trade against the U.S. Treasury, that puts a lot of pressure on the Dixie, the dollar. It also puts a lot of pressure on the United States because we have chosen the route of stablecoins.